Hey everyone, welcome back to Corporate Decoder. Today we are diving deep into Granite Construction's latest financial report, and let's just say things are getting interesting, especially with those recent big purchases. This is their quarterly checkup, giving us a snapshot of how the company is performing. Granite Construction is a big player in building roads, bridges, and all sorts of infrastructure. They've also been buying up companies to become a one-stop shop for construction materials. Now let's jump straight into the numbers, starting with what the company owns and owes. They have over $714 million in property and equipment, which makes sense for a construction company. And get this, they have over $215 million in goodwill. That's basically the extra value they paid for companies they acquired beyond the actual value of their physical stuff. This tells us they've been busy buying other businesses. Here's a look at how much money they made and spent. Their total revenue for the second quarter was over $1.1 billion, up from last year. That's a good sign, showing they're getting more business. But what's really interesting is their gross profit, which jumped by about $34 million compared to last year. That means they're not just selling more, they're making more money on each sale. However, their selling, general and administrative expenses also shot up significantly, especially in the 6-month period this year. This means costs to run the business, like salaries and other overhead, went up quite a bit. This table shows us where the cash is coming from and going. For the first half of the year, they pulled in about $5.4 million from their regular business operations. That's actually down from last year, which is something to watch. On the flip side, they used a whopping $207 million in investing activities. A big chunk of that went into buying things like marketable securities. And financing activities also used a lot of cash, over $54 million. This is often for things like paying down debt or buying back stock. Now, what's really driving some of these numbers are the two big acquisitions they made on August 5th, Warren Paving for $5 on dollars and Papik Construction for $170 fund. They funded these with a new credit agreement and cash from operations. These deals will definitely change how Granite looks going forward, and we'll see their full impact starting in the next quarter. They also have about $373 million in convertible notes outstanding, which is a way for companies to borrow money that can eventually turn into stock. For financial reporting, they're keeping a close eye on things like money market funds and heating oil swaps, valuing them as best they can. Their total assets are now over $3 billion, a nice increase from the end of last year. And on the other side, total liabilities and equity also grew, showing the impact of those acquisitions and overall business activity. Looking at their revenue breakdown, the construction side is still their main moneymaker, bringing in over $937 million in the second quarter. Most of this comes from public projects like roads and bridges. Their materials business, selling things like asphalt and aggregates, also saw a solid jump, growing by over 14% in the quarter. That increase in expenses we saw earlier, a big chunk of it is due to higher salaries and incentive pay. When the company does well, employees often get bonuses, which can really add up. There's also a figure here for amounts attributable to non-controlling interests. This usually means partners in joint ventures who own a piece of the action and get a share of the profits or losses. It went up significantly, which suggests those joint ventures are performing much better this year. Interestingly, their other income and expense items improved a lot compared to last year, mainly because they didn't have a big loss from paying off old debt this year. The non-controlling interests in their net income actually went up quite a bit too, going from a small $1.9 million loss last year to an $8.6 million gain this year. This suggests that their business partnerships are doing much better. Even with those higher expenses, their net income attributable to the company more than doubled compared to last year, reaching almost $72 million for the quarter. That's a strong performance, despite the increased costs. The big jump in SG&A expenses up to $85 million this quarter from $70 million last year was mainly driven by higher payroll and incentive compensation, likely due to the company's improved financial performance. While net cash from operations decreased a bit this year, it's important to remember that construction companies often have lumpy cash flows. Money can get tied up in materials and projects and then be released as those projects near completion. Management seems confident about their cash situation, expecting enough money to keep things running smoothly for the next year. They also have a good amount of borrowing power available if needed. to now. Looking at these numbers more broadly, Granite Construction seems to be making some smart moves by expanding their materials business and making strategic acquisitions. The increase in revenue and gross profit is a positive sign for their core operations. However, the significant rise in selling, general and administrative expenses, fueled by higher incentive compensation and payroll, does indicate increased overhead costs. While this often comes with improved performance, it's something to keep an eye on to ensure it doesn't outpace revenue growth. The recent acquisitions are a major strategic shift that should boost their scale and market reach, but will undoubtedly bring integration challenges and require careful management to realize their full potential. Their ability to fund these acquisitions through a major strategic shift that should boost their scale and market reach, but will undoubtedly bring integration challenges and require careful management to realize their full potential. Their ability to fund these acquisitions through their credit agreement and operational cash flow shows a degree of financial flexibility, but the increased debt will need. Alright, that's our breakdown of Granite Construction's latest filing. What's your take on these numbers and what they signal for the company's future, especially after those big August acquisitions? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more corporate deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.